Good morning and welcome to today's pre-market report. Now in today's pre-market report we'll be taking a look at what will be affecting our markets today, plus what will be the trading plan for the Sensex expiry for option buyers and option sellers. Now before we go into the Sensex, now when I take a look at the news and we take a look into what outlets has been happening, for example, yesterday's Monday's trading session was brutal for the markets, as a lot of people expected an up move due to BJP's win, but it did not come. This is as RBI rate cut, budget, now BJP's victory, all have not been able to stimulate the market. And I largely believe that is simply due to what I had said in Sunday's video, that all positive news is being used by the FIs as an opportunity to exit the markets. This is, if we look, I was looking at the numbers yesterday, that if we look at the numbers, the FI selling in 2025 so far, which is let's say 40 days, has been equal to roughly 35% of what they sold in the whole of 2024. So it just shows the intensity of the selling. 2024 was rough in FI selling, but 2025 has come rougher than even that already. We have already done to roughly 35% of it. So if we continue going at the same pace, we might do double of what the FI sold last year if they continue like this. So that is affecting the markets. Then I would say, coming now to what the trading session plan is for today's trading session and the next ones. Now, according to me, how the market is right now, you cannot have a trading plan that's going to be stagnant, that yes, I'm going to be bullish today and I'm going to ride the bullish wave for the next 2 to 3 days. I'm going to be bearish and I'm going to ride the bearish wave for the next 2 to 3 days. That's simply not the case anymore. This is as, let's say when we look at the news cycle for today, on one hand we have the RBI has said they'll be doing on Feb 13th an OMO operation, and before it was planned for 20,000 crore, now they've doubled it to 40,000 crore. Big positive news. On the other hand, we have yesterday, post market close, one of Trump's key staff members said that India has been putting too high tariffs on US products. So it shows what Modi is going in for. And now, whether people like it or not, Modi is not a guy who can stand up against Trump. So that's going to impact the market in a negative light. Then the US has put tariffs on steel and aluminium imports. It's not subjected to India, but it's going to hit India also, because India manufactures stuff of this kind which is exported to US. So all that has ended up causing a lot of a quagmire, I would say, of the whole situation, and that is why I believe that right now you're not able to hold a bullish or bearish view. It is trade as the day goes. I think this whole week will be like that. It wouldn't have been, but due to Modi visiting US, I believe it will be like that. Now, the other factor which I believe will be affecting our markets today is, let's say, last night the Union Finance Minister said she hopes to introduce the new direct IT code in the Lok Sabha next week. Now this is something that became postponed from mid last week. It's every day ball is getting rolled over again and again. So that is ending up doing more damage than good to the markets. So according to me, today's trading session, whether you're trading the Nifty, whether you're trading the BANKNIFTY, whether you're trading the Sensex expiry or stocks, is trade as per the market is moving at that moment. You're not going to be able to hold a bearish view or bullish view, as at some point we're going to get a dead cat bounce, but we do not know where that point is. Until then, short the market or go, and when dead cat bounce comes, go long in the market. Now, getting into Sensex exact trading plan. Now, Sensex exact trading plan, open the 30-minute chart. Now, when we look at it, I've opened, as I always say, I've opened the Sensex 11th Feb futures. So these levels will not be applicable if you go and open, let's say, the Sensex month-end options. They're only applicable if you using the 11th Feb futures, since it's for this expiry. Now, as I said, it's a play as you go. So according to me, due to that, between 77,600 and 77,100, trade both ways. And we can see that has been happening even yesterday's trading session. That is where we sort of got a stop to the damage which has been happening. So between this zone of 77,600 and 77,100, trade both sides. You're not going to get clean longs, you're not going to get clean shorts. But if it breaks 77,100, then it's a short to first 76,650 to 76,800. That's a major support zone. If it breaks that, then 76,250 to 76,400. On the other hand, if it breaks above 77,600, then it's a long to 77,750, 77,900. These three are going to be very important in determining how far the Sensex can pull, not only today's trading session, but in the overall big picture. If you break 77,900, then it goes to 78,100 and the above which are listed there. So my trading plan again, between 77,600 and 77,100, I'm not going to hold a view. Long trade comes, I'm trading long. A short trade comes, I'm trading short. This is option buying. If we break 77,100, then I will look more for short trades because you're going down. And long trades, if you get a long trade, it will be most likely a short-lived one. So let's say if a short trade is going to give you 300 points, a long trade might only give you 50 points. So you have to look at it like that. If you break 77,100, short to the next key supports which I've given, and then next that. If you break 77,600, then go long. Now you'll notice that the resistance zones are much more frequent than the supports. This is as the market has got more bearish pressure, whether we like it or not. So due to that, the resistances are more frequent and are going to be a bigger hurdle to cross than the supports. Supports are easier to break right now, and resistance is hard to cross. That's my option buying trading plan. Now, what's my option selling trading plan? Now, on the option selling front, like I did in the last expiry, I had said that I'm going to wait for the first 30 to 45 minutes to cross. I'm again going to do that. Then last time when I did it, it worked out perfectly. I'm going to do that again due to this new cycle which is going on right now, where we do not know. The RBI is trying to give positive, Trump is smashing everything, and this I'm recording the night before, so we don't know by morning what more bombs he could have laid out for the Indian markets. So now due to that, I'm going to let the first half an hour to 45 minutes, depending on how the market performs, trade. Once it does that, if we are still between 77,600 and 77,100, then I will sell calls above 77,600 and puts below 77,100. That's aggressive. You want to be cautious, calls above 77,750 and puts below 76,800. That's if we stay within this range of 76,600 and 77,100. By chance, in the first half an hour, if you have broken out on one of the sides, let's say you have broken 77,100, then I will start selling calls of 77,600 and wait for it to fall to one of the key supports and then sell P's below that. How will I know if that support is holding? Number one, if you're getting some price confirmation here. Number two, if the trend catcher has gone flat. And number three, the volume has changed. If the trend catcher has gone flat, simply means we're going to hold that level. If the volume has changed, then we're going to get a move to the other direction. And the same goes for the other side. By chance, we have broken 77,600, then I will sell, after half an hour, I will sell puts and then sell calls once it goes and stalls at one of the resistances. So my today's trading plan is again, like the last expiry, not clear. In last expiry, when we did this, it had stayed within the range and we just sold the range, and it was a very, very easy expiry. But today, I do not know whether it will be like that or not, as the markets are what they are right now. So I'll let the first half an hour pass. If it's between the range, then I'll sell both calls and puts at the same time. If it has chosen a side, then I'll sell either calls or puts first, and then wait for it to reach one of the key levels, hold there, and then I'll sell the other side. So that's my trading plan. If you're trading option sells, please keep tight profit stops today or tight loss stops, because if by chance, let's say it stays within that range of 77,600 to 77,100, and at some point of the day it can pop out of that range. So you want to have your stop to take you out of the side which it pops out with the profits, and then let it ride on the other side to zero. So that's my trading plan for today. If you liked it, then hit that like button, subscribe to the channel, and click the notification bell. And also, any stocks you want covered, drop them in the comment section below. Thank you.